Hello, Ashwin. Welcome back.
Thank
And
you.
I'm attracted by your backdrop that talks about Wall Street. And this is exactly the channel that investors, sophisticated or retail, should come to hear your point of view from your vast years of experience so that we can cut through the clutter, we can make sense of all the headlines, and hopefully we can raise our financial intelligence as well. So listen to this. In January of this year, 2023, Wall Street forecasters predicted a global recession and warned that bonds would outperform stocks. And guess what? They were all wrong.
That's correct, Jesse. Thank you for having me back. Now, despite these doomsayers, as early as 27 of May, we produced a video telling the world that the stock market was back. And Jesse, you were in that video.
Yes.
Then again, on 30th May, we announced that the NASDAQ had started a bull run. Okay.
Mm-hmm.
These videos can be viewed on our TikTok and YouTube channels. TikTok is at Ashwin PPC09 and YouTube is bit.ly/algo wealth. Now,
Mm-hmm.
I'm going to show you something very interesting to show how wrong Wall Street was.
Mm-hmm.
Chart shows you how wrong Wall Street was in predicting a recession for 2023. And I'm going to tell you very soon how which parties were actually wrong on their predictions.
Mm-hmm. So how do we look at this chart, Ashwin?
You can see that in 2023, the stock market went up sharply compared to 16, 16, 17, 19, 21, all the way. Now,
Yeah,
let me tell you what happened.
Okay.
JP Morgan strategists ditched a recommendation to buy 5-year treasuries. They were asking people to buy 5-year treasuries, and they ditched that recommendation. While BlackRock, which suggested investors buy investment-grade bonds, have now turned neutral on the sector from bullish. Now, these are big names, Desi. And as usual, what happens?
I was about to say I was seeing a repetition here of the kind of advice my bankers gave me. And when things went wrong, they slapped on the sophisticated investor label on me and said that I should have known better about the risks.
Now, let me elaborate. The NASDAQ has surged 37% this year, okay, for all those who are advised by their banks to buy bonds.
That's good news.
While the S&P has climbed 16%, and Goldman Sachs now sees the S&P climbing to the 4,500 level after the bank downgraded the odds of a recession.
Wow.
Banks have now done a turnabout. Okay, Bank of America says it has revised higher its target for US stocks, while Barclays has now given up on their preference for bonds over stocks. BlackRock has just introduced a bullish call on artificial intelligence, and Citigroup has now turned bullish on non-US equities on the back of a dollar decline when the Fed stops raising interest rates.
Well, my advice as an investor, having dealt with private banks and securities companies, and then my message to all watching this video is investing is not a lottery ticket. As we have proven with all these videos that we're making, contrary to all the doomsayers, the stock market has eventually bounced back as we said it would, and more importantly, quality companies have, as you predicted, bounced up strongly. So my conclusion to all this is to refrain from scalping and be mature about your investments and be prepared to wait 6 to 12 months like an investor, not like a scalper or a gambler.
You are right, Jesse, because we always have kerfuffles with some of our clients who insist that especially when the market is going up strongly, they insist that we turn to scalping. They want to make
Yes.
scalping. They get greedy.
Quick money,
And we
quick
tell
money.
them, look, that is not advisable because you are buying a quality company. You can be right doing it, but don't scalp. Take the profit, wait for the market to drop and buy again. Don't scalp.
Yes.
Scalping is the most dangerous way to invest. And it's not investing, it's gambling. Okay. But now, while you're buying all these quality companies and seeing the stock market go up, we have one more level for you to consider. That is make a passive recurring income every single week besides your stock investments. Let me explain. There's a managed fund that trades FX volatility. I'll come back in a minute on that. And it is paying out 8% per month, which works out to 2% per week. Now, what is FX volatility? It does not trade stocks, only trades foreign exchange, and it's managed by a group of professional traders. And they trade volatility, meaning they make money from the gyrations of the market. That is why
I like the word gyrations.
That's why the payout is 8% per month. Now, secondly, there is a staking fund, which is a sweetener, where they pay you 1 to 2% per month, which works out to up to 0.5% per week. So all in all, when you put in the managed fund and the staking fund, while you're waiting for your stocks to go up further and churn a profit, you are making a weekly recurring income of 2.25% or even 2.5%, and that works out to 9 to 10% per month.
So we've had you speak about this managed fund again and again, sometimes in the other videos.
Yes.
And for those who've said it's too good to be true, or no, it's too risky, well, I think you've got an answer to that. And all I can say is, from an investor standpoint, if you don't make a yield of 30% average per year, it's not worthwhile investing, because it costs you too much, and there's inflation to consider. And for me and other countries, there's the depreciating currency, you know.
Absolutely.
So I think that it's worth a call to Ashwin to see what you can do about quality names, tech companies, and to make the best use and opportunity with this Wall Street rising. What do you say, Ashwin?
That's correct, Jessie. And before I sign off, I would like to encourage everyone watching this video to sign up for our free Algorithm Ideas newsletter. And that will be provided in the description box of the video that you're watching.
Right.
And on YouTube. Because give you algorithm-generated ideas absolutely free. And you not only know what the market is doing, you know what the next big thing will be.
Yeah. So I think, not wanting to be smug about it, but if you don't have a recurring US dollar income or an income in a stable currency, then things could get a bit rough. But now, to take advantage of the threshold and the rising Wall Street markets, right? That's correct.
That's correct.
Okay. Thank you so much for today, Ashwin. How do we contact you?
We can be contacted at bit.ly/algotrader, which will land you on our WhatsApp page, and we can clear all your doubts or your too good to be true factor.
Okay. Thank you so much for today.
Thank you.